In this video, I want to go over how these, how I expect this intermediate decline to progress. We are in the slope of hope stage of this intermediate cycle, I'm pretty sure. I don't think this is going to turn out to be a triangle. The reason I say that is it's not equal. Let me see if I can draw this in. All right, so you can see this this upper rail of the supposed triangle is not equal. If this was a valid triangle, I think the pivot would have come up here. So this leg up probably would have come up here, and this would have been an equal triangle, equilateral triangle. And in that case, then I think we would break out to the upside, but that is not how this is forming. This is, if you kind of take away this tail, this is forming more like a flat-sided triangle. Like this, and those kind of triangles usually break to the flat side, which would be downward. So what I'm pretty confident is happening is we're in the slope of hope. This monster rally has conditioned everybody to expect price is going up. The fundamentals are being proven correct, and gold is in a bull market and is going to the moon. And traders have just become conditioned to expect that to happen, that price can only go up. We've got to erase that sentiment. And the sentiment is very strong, so it's going to keep people buying for many weeks, anticipating the next big move higher like we had here. But smart money is going to be selling those rallies. That's why we're not able to hold these overbought conditions. When we get short-term overbought, then the market turns back down. So we've got a couple of things to watch here. All right, so the first one, of course, is the 10-day moving average. When we close below that, that's going to make the bulls a little bit nervous. But then we've closed below that several times here, and it hasn't mattered. So I don't think that's going to trigger a selling panic, just a close below the 10-day moving average by itself. The next line in the sand is this support zone here right around 1932, 1933, something like that. This has been support, closing support, other than this crash candle. It's been closing support for several weeks now. So if we were to close, or when gold closes below that, let's just call it 1932, the bulls are going to get a little more nervous. And then, of course, our next real line in the sand is going to come at 1923. That's the 2011 high. So a close below that, I think it's going to take two. I think this bullish sentiment is going to be extremely strong, and I don't think at this point, I don't think one close below it is going to trigger a panic selling event. I think it's going to take two. So I anticipate that at some point here, maybe not this week, maybe next week, we'll get a close below 1923, and the buyers will step in and push it back up again. And then we'll have another little bounce, and then we'll have to make a second close below it. And it's probably that second close below 1923 that's going to trigger the real selling. And that's when we'll get our recognition day that the bull theory is in jeopardy. All right, so I'm still operating under the assumption that we're forming a T1 pattern. So this was the first leg up in the T1. This is the sideways midpoint consolidation. Second leg up did just about as much as the first leg. I was kind of looking for 2100. We came up just a tiny bit short, but still within the range of what I would expect out of a T1. And then the ending phase of the T1 pattern is a retest of that consolidation zone. So I think once we do start, once we get our recognition day, break through 1923 on a sustained basis, then I think we're going to come down, test this 1800, and I expect we're probably going to have to break that 1800 too, which will take out that next level of support. Let me widen the chart. All right, so here's that next level of support at 1800. And you can see we had some churn right in here as we tried to get through that, but didn't take long before we got through that. So my guess is it will also have to take out that level of support to really wash out all of this bullish sentiment, get everybody negative, and then we get our bottom, and then I think we start the bubble phase in gold in earnest. So my expectation is that we're probably going to complete the T1 pattern and come down and test this midpoint consolidation zone here, maybe around 1750, before we are ready to really start the bubble phase in earnest. And we could even go as low as 1650. We could break below this the bottom part of this midpoint consolidation. That would, in my opinion, that would load the slingshot for sure, and then that would send us to, that would be the fuel to send us to 7,000, maybe even 10,000. But I think we at least have to come down and break this next level of support at 1800 and probably in 1750 before we get our final intermediate cycle low. And I think everyone should just expect this is going to be very difficult for at least a couple more weeks. It's going to take, the buyers have just become conditioned to expect higher prices. The fundamentals demand it, and of course we're seeing a lot of talk about Buffett buying metals as well, or mining stocks anyway. So we're just going to see a lot of bullish sentiment that's going to take a while to get erased. We're in the slope of hope. And you can see it, very clearly here in the mining stocks. Despite gold being down, the buyers are trying to buy the mining stocks. That sentiment has to go away before we get our intermediate cycle low, and I think it will. I would say we're probably, at least before this is over, we're probably at least going to come down to 35 on the miners. We've got to at least retrace 38% of this rally. All right, so you can see the first, the crash leg down retraced to the 23%. I think we've got to at least come down and hit the 38% Fibonacci retracement before this is over, and then there's an off chance we can maybe even hit 50%. But right now the bullish sentiment is still strong. There's still a strong tendency to buy the dip and expect price to only go higher, and we've got to get people knocked off the slope of hope. Once we do, then we'll be set up for the intermediate rally, and I think the bubble phase in gold will be many times bigger than the bubble phase that's in progress in the stock market right now. So at some point, I think you got to just be happy with your gains in stocks, lock those gains in so you don't get caught when the bubble pops, and then at that point, I would give my blessing to go into full positions in the metals for the next ride up, because like I said, I think this bubble is going to be much bigger than the stock market bubble.